Hi, welcome to my Trade Wise channel. In this series, I try to simplify the concepts of trade finance for everyone to understand easily, so that it benefits new joiners, as well as bankers and financiers from other parts of the industry. In today's video, we will be covering three main parts. What is a LC? Who are the parties involved in a LC transaction? And what are the common types of LCs being used in the world? Now let's move on to the first part on what is a LC. A letter of credit is a financial instrument used in international trade to provide a guarantee of payment from a buyer's bank to a seller's bank. The purpose of a letter of credit is to reduce the risk of non-payment for the seller by ensuring that payment will be made as long as certain conditions are met. It is usually utilized when a buyer and seller do not have a long-standing relationship with each other, and the seller prefers to have a bank involved to guarantee the payment. When a buyer and seller agree to a letter of credit, the buyer's bank issues the letter of credit, which serves as a guarantee that payment will be made to the seller's bank once the goods are shipped and certain other conditions are met. These conditions may include things like the presentation of shipping documents, inspection of the goods, or compliance with other terms and conditions agreed upon by the buyer and seller. Next, let's talk about the parties involved in a LC transaction. In an international trade transaction, the seller will typically request the buyer to open an LC, so that there is a financial institution involved to guarantee the payment, which is usually a bank. This bank is referred to as the issuing bank, as it is issuing a LC on behalf of the buyer. On the other hand, the seller will typically also engage another bank to face the issuing bank. This bank is referred to as the negotiating bank, confirming bank, or discounting bank. We will go into the differences of the terms later on. The main roles of the banks on both sides is to ensure that the documentations involved are in order as agreed by both buyer and seller. The main points usually covered are the quality of goods, shipping details, and payment terms. Do note that banks usually do not handle the underlying goods involved, as they are mainly responsible for handling the documents. Now let's move on to the common types of LCs used around the world. Firstly, LCs that are used in international trade transactions are usually irrevocable. This means that the LCs cannot be amended or cancelled without the agreement of all parties involved. Next, a sight LC is a type of LC in which the issuing bank commits to pay the beneficiary, which is the seller, upon presentation of the required documents, such as the bill of lading, invoice, or packing lists. These documents usually prove that the goods have been shipped and are on their way to the buyer. On the other hand, usance LC is a type of LC in which payment is made to the beneficiary at a future date, usually after the goods have been shipped or a specific condition has been met. This is typically 30, 60, or 90 days after the bill of lading date. Lastly, UPAS LC, which stands for Usance Payable at Sight LC, is a type of international trade financing method where seller can present the documents required by the LC to the issuing bank and receive payment immediately upon presentation, but the buyer can pay the bank at a future date. This combines both features of a sight LC and a usance LC. I hope you find this introductory video useful and simple to understand. In our next video, we will go through in more details what each type of LC entails, the documents involved, and the commonly used LC confirmation and LC discounting methods used for financing and risk management purposes. That's all for now. Thanks.